It is Friday, July 6th, Jobs Day. You're watching the News Hub. I'm John Hilsenrath, and it's all about the jobs report today. I'm here with Brendan Conway. Brendan, we're going to be getting numbers any second now on the unemployment rate, payroll numbers. Big day for the market. We're getting our first numbers in. The unemployment rate is unchanged at 8.2%. That's not very good news for Barack Obama. Not very good news for the Federal Reserve either. Big day. What's your take on how the markets are going to look at today's reports?
Yeah, well, John, you know, we came in the session, the Dow was down 2 out of 3 days. The futures were soft this morning. I mean, this is the most important data point of the year, or of the month, excuse me, for people who watch data. And, you know, the thing is, expectations actually were rising heading into this report. Do we have a read on the numbers themselves?
We're actually going to be going any second now to Phil.
Yeah.
Non-farm payroll is a big disappointment. 80,000.
Oh wow. Yeah. Okay.
So you know we're going to be getting more of these numbers, and I think a lot of people were expecting after the ADP number yesterday that maybe we'll get something better than that. But another disappointment. 8.2% unemployment rate. 80,000 payrolls. Big implications for the 2012 election, big implications for the markets, big implications for the Federal Reserve. I think on every count here, you have to say to yourself, the Fed is potentially back in the game. Barack Obama is not having a good start to his July 4th weekend.
No, that's right. And, you know, I mean, 80,000 just isn't going to cut it for job growth.
Yeah.
What you might see in the market today, though, is people reacting to this idea that, geez, there's more of a chance of quantitative easing.
Right.
So, I mean, it's not as if, you know, I don't think we're going to see the market plunge on this number because in a very perverse way, bad news has become good.
Absolutely. And, you know, and it was funny the way the markets reacted yesterday to better news. We saw them selling off.
Yeah.
And, you know, on this idea that maybe the Fed wasn't going to do quantitative easing. But a headline number of 8.2%. The Fed wants to see progress on bringing unemployment down. We're not seeing progress. There's going to be a real discussion there, I think, at their July meeting about whether they do another round of bond buying.
Right.
So we're going to be getting more details from our colleague Phil Izzo in a second. Digging into these, we still have to look at the revisions to previous months. We don't know if they're revising up or revising down. We have to look at the texture underneath the unemployment rate. It's steady, but are people dropping out of the labor force? What kind of changes are we seeing in actual unemployed and actual employment? We have a lot more to come on all of this. Your first take is, do you think the markets buy this news?
Yeah, I mean, the trend is out there that kind of traders play the bad news for the policy response. They've been doing that in Europe for actually it's not months, it's years now. They've been doing that with the Fed. I mean that's the trade right now. I mean, you saw Spanish bonds just get killed in recent months, and then you have one summit that kind of last week in Europe that hints that maybe Europe is starting to get its act together, and those bonds just perform magnificently for people who got into them at the right time. Of course, today, this morning, they're back up to 7%. You see the same thing here in the States where people kind of get into risk assets thinking about the policy response. Of course, that hasn't worked out too hot for people in commodities. I mean, the commodities, you know, the whole complex basically entered a bear market 2 weeks ago, and it's been kind of bouncing around. Oil's coming back. But
well, how do you see the commodity markets playing off this? One of the silver linings of all this bad economic news for American consumers is gasoline prices are falling.
Yeah.
I would think we look at a number like this, we say the economy is not doing too well. Maybe we could see oil sell off again today.
Yeah, I mean, certainly good news for the consumer in the short run, but I mean, kind of the broader picture when you look at demand for commodities, right? Like the actual use of it by corporations, and you know, I mean, you want there to be strong demand ultimately, even if you know pricing becomes a problem. And the long-term trend, if the price is down.
So, Brendan, I'm going to cut you off. We're getting more numbers right now from Phil Izzo in the newsroom. Let's go straight to Phil and dig into this unemployment report, which is going to dictate trading today. What do you got for us, Phil?
Hey, John, what we're seeing here is it's a disappointing report, obviously. We're seeing job growth in the slow range, below the type of level we need to bring the unemployment rate down quickly. But this is almost essentially a flat jobs report. We're just not seeing anyone hiring anywhere. Across all the industries, there's some cutbacks, but really the cutbacks aren't even that big. It's not like the government has been cutting back for months now, and they subtracted about 4,000 jobs, not that much. It's basically an economy in a holding pattern.
How about revisions? Do we have revisions
Yeah, the
to
revisions
June,
are
revisions to May?
They're a bit of a mixed bag. They were revised up. April's number was revised up slightly, just about 8,000 jobs, and May's was revised down.
Right.
So again, this flat picture where things are virtually, they're in this weird holding pattern where no one is like jumping in to start hiring in. There are some some little positives in here. The wages were up a little bit. Hours work were up a little bit. Temporary hires were up a little bit. All those things say that there might be some demand building in there, but at this point, no one's hiring full-time workers.
So we now have 3 or 4 months, I don't know if you were able to pick this apart, of job growth below the 100,000 threshold. Is that...
That's correct. 3
right.
months below 100,000, which is, as we said, really not fast enough to bring the unemployment rate down.
No, what's interesting is we've seen the same pattern the last couple of years. In 2010, 2011, really subdued job growth in the summer, and then it comes back as we go into the fall. So we could be seeing a repeat, basically, of what we've had the last couple of years.
Yeah, I mean, that's definitely the hope, is that we get past a rough patch where people are concerned about Europe and China, and if we can get past concerns about Europe and China, there's a chance that going into the summer, things can speed up a little bit.
All right, so Phil, do you have anything on, I know you're still digging through these numbers, there's a lot of details to pour through there. Do you have anything on the labor force? That's been a very important subtext here.
The labor force increased last month, which is a good thing. It means people are coming back into, we got 130,000 more people coming into the labor force, which also means that the unemployment rate is staying around the same level. But it's not necessarily because there are more unemployed. The number of unemployed last month was only up a small amount, less than 50,000. The number of employed was actually up more than the number of unemployed, but there were just more people joining the labor force.
Phil, we want you to go back and dig deeper into these numbers. In the meantime, we're going to go to David Wessel in Washington to talk about the policy implications of this report and the political implications. David, I think you've heard the numbers. What's your take on what does this mean for Barack Obama? What does this mean for the Federal Reserve?
It's bad for Barack Obama. It's bad for the American worker. And it puts, as you said earlier, a lot of pressure on the Federal Reserve to do more. Look, we had, even after the revision, 68,000 jobs in April added, 77,000 jobs in May, now 80,000 jobs in June. At some point, you can't say this month is a fluke. What Phil describes is true. The U.S. economy is kind of treading water. But treading water at 8.2% unemployment is bad. I don't think the numbers themselves are what determines how Barack Obama does, but the numbers are a reflection of what people are actually seeing out there, which is it's hard to get a job.
This is the time of year when people are starting to form their opinions going into November about how the economy is doing. You can't, I think, walk away from a report and from a sense right now that this economy is not much stronger than it was when Barack Obama took office.
Well, as you know better than I, John, we've had our ups and downs, and it's not much better than it was than when Mr. Obama took office, but we've had some, which we've been growing. We're not losing jobs. So you can predict what the argument will be. He'll say it would have been worse if not for me, and Romney will say it would have been better if I had been president, and they'll duke it out. But the bottom line is the economy is a huge obstacle to Barack Obama's reelection. If he gets reelected, it'll be in spite of the economy because he turns out to be a better candidate than Mitt Romney, or because he can keep changing the topic to immigration, gay marriage, foreign policy, and other things where he has a stronger argument to make.
All right, and David, you've been watching the Federal Reserve for a long time. Has Ben Bernanke's patience run out? Is he ready to pull the trigger on QE? What do you think?
Well, as you and I know, it's hard to predict what the Fed is going to do at any one meeting. But the fact that the economy is not performing as well as they had hoped, the fact that unemployment is not coming down, certainly increases the chances substantially that they will take further action, if not at their meeting at the end of July rather, than sometime this fall. The economy is not delivering. Fiscal policy is not going to come to the rescue. Mr. Bernanke's view is that his mandate is to get unemployment down and keep prices stable. Inflation has been running below their target. it seems to all point in one direction, more QE from the Fed.
Right, David. I think we're going to be talking about that story all day. Let's go back to Phil. He's been digging deeper into the numbers. What do you have for us, Phil?
Hi, John. There's another sort of disappointing aspect to the report as well. The U6, which is the unemployment rate, what we call the broader unemployment rate. It includes people who are working part-time but want full-time work, and discouraged workers, people who we consider marginally attached to the labor force. Even though the overall rate at 8.2 stayed the same, that broader U6 rate jumped up a little bit to 14.9%. And a big part of that was these part-time workers who want full-time work.
Right, and Phil, that's a very big political point that's going to come up in the campaign, and the Romney people are going to constantly be looking at this U6 number. How about manufacturing? That's been one of the bright spots for the economy. Did we add jobs in the manufacturing sector last month?
We did add jobs, but just barely. I think it was around 11,000. Construction was absolutely flat. We didn't add or lose any jobs. Really, all the job growth we did see, which was weak enough, was all in the service sector. Manufacturing and goods producing in general was relatively weak, less than 20,000 jobs.
And what's the
change.
public-private breakdown? How much of the weakness that we're seeing was coming out of government?
Yeah, government subtracted jobs again, as they have for months and months and months now, but they didn't really subtract all that much. They only took about 4,000 jobs away from the overall picture. So while private is definitely doing better, it's the only place where there is job growth. At least the job losses we're seeing in the government sector aren't quite as bad as they've been in the past.
All right, thanks very much, Phil. We're going to
Sure.
be talking about this report all day.